Good morning and welcome to Indian Open right here on BloombergQuint Live. It's a bit more sedate or somber day today compared to yesterday morning. Yesterday we had a whiff of good news around. There was positivity around the Asian screen as well, and SGX was indicating towards the start, which was be in the green. Today I don't think we have the luxury of all of that. We don't have the luxury of some of the stronger names being at slightly lower levels, the likes of Reliance, for example, and people are now starting to question whether the move is justified. There might be a technical reason, a May 14th rights issue date, which I believe in is a technical reason, frankly, for the stock to stay high, because the record date is May 14th, and therefore maybe people want to stay invested till then because you get the stock at 12.57, even though the ratio is 15:1. So all of those factors notwithstanding, NBFCs and frankly, the stimulus getting delayed by every single day hampers the NBFC businesses by as much, and therefore that's a bit of a negative too. I think the only reason for the markets to actually have some shoots of optimism, frankly, to my mind, is the possibility of any kind of stimulus, because that announcement could bring about a technical rebound in a market that has gotten beaten down from 9,800 all the way to 9,200 or thereabouts right now that we are in currently. Save for that, at 19 times trailing 12 months, MSCI India has no business trading at these levels, to be honest. And with that, I just bring to you today's show, which is all about what would happen to some specific names, the likes of Piramal Enterprises, because of the housing loan moratoriums that its customers, 85 to 90% of its customers have taken. We'll talk in detail about Godrej Properties and some bit of green shoots that are there within some of the larger players. There is a report on DLF, I think, which speaks antique report on DLF, which is positive. And of course, we'll watch out for Asian Paints today, because that's the big downgrade from Goldman Sachs. So 2 or 3 names that you have to definitely monitor within a larger basket. Mayuresh Joshi Johnson from William O'Neill India. Mayuresh, good having you. Thanks so much for joining in. Mayuresh, your CanSlim approach, I reckon, in a very simplified fashion, believes in buying companies which are at highs because they are at highs for a reason. But if the market, which is looking slightly dodgy, do you kind of stay away from making large investment decisions right now?
Morning, Neeraj. Oh, absolutely. And our CanSlim approach, as you rightly pointed out, I think it has a blend of both factors. So earnings, which are extremely good and supportive, I think if those robust earnings come through, I think that gets reflected in stable return ratios as well. And what probably happens in terms of price volume, because of all these factors combining together, I think institutional build-up also remains pretty strong. So what you probably witnessed, Neeraj, and you're absolutely right, I think all the high beta correlated and the economy export sectors are probably feeling the heat over the past few weeks and months in terms of earnings downgrades over the next few quarters, and the uncertainty looming over them in terms of demand recovery playing out on the stock price. I think that's clearly getting played out here. So I think we have a lot of importance on the CanSlim methodology in terms of EPS rating, on how the RSI line and ratings are moving about. And they're probably looking weak for all these beta correlated economy related stocks and sectors as well.
Okay, Mayuresh, now, I enumerated my thoughts. I may be completely wrong here, but I still thought that the bias of the markets is downwards, because, I mean, frankly, I don't know how many people can justify us trading at 19 times trailing earnings and MSCI India trading at that time when some of the other peers are not. But that notwithstanding, I want to come to individual components before we get to the stocks in news. And these have been the larger components, right? Reliance Industries. Now, May 14th is the record date. Today is likely the last day to buy into a Reliance Industries if you want your shares to be in the record date, right? So would you reckon that post today's move, this up move in Reliance also will probably at some point of time see some laws of gravity, right? I mean, nobody's thinking of applying any kind of holding company discount. Nobody's looking at the other businesses. People are getting carried away, and maybe not wrongly, maybe in the right fashion, with the kind of investments that Jio is getting. How do you approach Reliance? Because Reliance is no longer at 1450. Reliance is at 1600.
No, so absolutely. I think I was hearing your opening comments, and yeah, there is a technical adjustment at play as the rights issue date is May 14th. So I think that is one aspect in terms of the price holding up for Reliance at this point of time. Now, the other parts and the SOTP parts of the business, Neeraj, Again, I think with oil prices where they are at this point of time, I think the oil as well, I mean the refining as well as the petchem business is obviously going to come under a lot of strain. But if you probably look at consensus estimates that have probably come through, because directly I think the pricing of downstream products as far as the petchem business is concerned is linked with crude pricing as well. So if you assume crude pricing to stay in a particular range, say between $30–40 a barrel, you're probably expecting petchem earnings at the EBIT level to come off significantly compared to the last year. On the refining part itself, what you've probably seen with Singapore GRMs at this point of time, and you probably assume all the cracks still remaining extremely weak, and though RIL has a huge exposure in terms of different types of feedstock, and the outperformance still will be profound compared to Singapore GRMs, it will still be a weaker performance. Though refining is still around 20–25% in terms of the overall contribution, I think what probably then comes to attention is how Jio and retail are expected to grow. So the deals that Jio has got, I think, astounding number of deals at the enterprise value at 5,15,000 crores. So what happens in terms of the EBITDA for the enterprise business? I think that increases with the technology partners coming through over the next few quarters. The wireless business, as we discussed last week, I think with the competitors having no choice over the next few quarters but to increase ARPUs to protect their EBITDA and their cash flows, I think it will be a level playing field, which means that Jio will also have the flexibility and leg room to increase ARPUs, which increase the EBITDA from the wireless business as well. So there is certain amount of logic that wireless EBITDA will increase manifold from the current level over the next couple of years. Retail does get impacted for a quarter because of the shutdown. If you probably look at the retail setup from a revenue perspective, groceries are almost 30, 35, 40 odd %. I think the rest is still dominated by apparel and discretionary electronic sales. So I think the first quarter is definitely going to get hit. For the annualized year, the numbers will still be soft. So I think it's the Jio leg which is going to take Reliance higher, purely from the deal perspective. And the expectations that the Aramco deal is still on, which means that the debt totally comes off, which is a huge positive from a leverage perspective on the balance sheet, increasing ROEs and dividend payouts as well. So there are a lot of positives, Neeraj, but the technical adjustment is at play. The markets are probably going nowhere. You're absolutely right. Reliance is just hanging by its teeth and taking the market with it at this point of time. So I think it's a range-bound trade at this point of time, unless Reliance shows a very strong move with volumes over the next few weeks. I think anybody holding on can definitely hold on, but fresh buying should be avoided till that point of time, until the technical adjustment happens.
Okay, we'll watch out for that. What are the other stocks that one should watch out for? Well, let's get in my colleague Nikki Mirchandani, who joins in right now with a list. Nikki, good morning.
Good morning. I'm going to start off with Godrej Agrovet because the results have been better than what the street was estimating. Revenue is up by 7% year-on-year basis, adjusted the sale of land factor that we had. EBITDA, that's almost down by as much as 36% for the company at a number of 48.2 crore, but then it's way higher than what the street was estimating, a number of around 25 odd crore. Profitability has taken a hit, declined by 10%, but that's mainly on account of other income, because the company has also reported an exceptional loss of around 99 million in its subsidiary Godrej Tyson Foods. We're looking at Laurus Labs, and you can expect some amount of negative reaction on that, because Warburg Pincus has decreased the stake in the counter from 19.6% to nearly 11.6% on May 8th. So that's a huge decline that we're seeing on this counter coming in from Warburg Pincus. So expect some kind of negative reaction on back of that. Aviation stocks, you might just see some positive tractions on these counters, because the government of India is mulling resuming commercial flights on May 18th or earlier. This could be positive for the counters which are cash-strapped. It's going to provide some money, and Indigo, Interglobe Aviation, and SpiceJet are the few names that we can keep an eye out on. Lastly, we're looking at Nippon India and IndusInd Bank. Now, there's an ET article which suggests that Nippon Life is going to be has already begun the discussion with Hinduja-backed family IndusInd Bank. Nippon Life is to explore a strategic investment in the private lender, which is battling with bad loans. So it's expected to be a positive for both the counters. However, valuation holds the key.
Thanks, Nikki, for that. So do watch out for some of these names. Frankly, I mean, this announcements around a possible deal as and when it happens, if it happens, can bring out interest for a spurt of a day. I doubt that it can really bring about sustainable interest unless a deal actually happens. Marish, I mean, financials are just looking too wobbly right now. Would you really, I mean, if you are an investor, that is, would you be considering IndusInd Bank individually because of valuations or because of possibilities of deals like these?
So again, Neeraj, I think classical arguments getting played out. Valuations are no doubt very, very reasonable at this point of time and have come off very, very sharply from the elevated levels that we've seen a few quarters back. And there was a very logical reason on why that was happening. I think if you look at the loan growth happening in higher double digits, 20-25% for most of the cases, you're probably looking at deposit growth which sustained over that period of time. So I think what it created was a balance sheet strength and the expectations of NII growth, NIMs being maintained at certain level and asset quality pressures not being very profound. But I think the whole cycle has probably turned in a matter of few weeks and months. So I think the loan growth has come off significantly. The stress that one really expects to come out, both in terms of the COVID provisioning that a lot of these banks are doing and excessive provisioning and that on balance sheets, the moratoriums that have probably got extended at this point of time, and the uncertainties around this in terms of the reported GNPAs, NPAs for the coming 2 quarters to say the least. I think that can have a huge hit in terms of annualized numbers, which the street has already factored in. But the second element is when and how will growth resume back? So I think, as I said earlier as well, I think we are in this uncertainty phase over the next few weeks and months. Markets would ideally like to see, I think, how Q1 numbers come through as well. Because you've probably seen some impact in Q4, but the full impact is probably going to get witnessed in Q1. And the management commentaries then are going to be extremely critical at how the business environment and the macro environment is over the next couple of months, because we are entering the monsoon season, which is again a very, very subdued business activity from an industrial point of view. And even from a retail point of view, I think the confidence is just not back, which might take a couple of quarters. So my own sense is that maybe the street will take cognizant of all these facts into account and then take a call after Q1 numbers are announced. Till that point of time, I think it's probably a range-bound rate for all these private and public sector banks at large.
I'll just be mindful of these. You know, the other thing that I would love to talk to Mayuresh about is Asian Paints and the Goldman downgrade. But the larger message that the Goldman downgrade has for discretionary consumption, even though it has been high quality in the past. And I think that's what I will want to talk about with Mayuresh Joshi in a bit. But first, maybe it's just around time that we talk about technicals as well. So let's try and get in our experts on board today to talk about that. Rajat Bose as well as Amit Harchekar join in. Gentlemen, both of you, thank you so much for joining in. Both of you have been bearish the last time that I spoke to you. Actually, Amit Harchekar was bullish, sorry. Rajat Bose was bearish. Let's try and figure out, with the markets not quite deviating too much from the levels that we were at last Wednesday, whether those thoughts have changed. Rajat, good morning. You explained in detail your rationale last time for being negative. Does that still stay? And are you initiating any trades to benefit from that view?
What I would like to tell you is that having maintained that negative stance throughout last week and yesterday as well, except for autos in yesterday's session, otherwise my clients have actually made money, and I didn't give any call on auto stock, although they performed pretty well. And mostly the bearish view continues. And actually, I would like to tell you this, that unless we take out 94.40 to about 95.50 on the upside, do not expect the Nifty to go up, Reliance notwithstanding, or rather, I would say Reliance, IT, and Telecom put together, they constitute about 31% relative weight of the Nifty, and now the financials and banks have come down to 33%. So even if Reliance were to perform, the banks are actually holding it back, so pulling it back. So from that perspective, if you look at it, I would say that it's a kind of a Lakshman Rekha on the upside, that 94.40 to about 95.50. That range, unless taken out decisively, at least I won't be gung-ho long on the market. And very frankly, the cycle studies that I've done suggest that we are in for a lot of trouble, late May, early June kind of thing. So I'm not going long gung-ho. And at higher levels, as I've been advising my clients to sell, even today I would tell your viewers also some stocks that can be sold. And if you could tell me if Reliance is excited today, in that case, there would be a trading opportunity there. If it is not, then I would wait for one more day, because Reliance, though, will go further up, cross 1625 and move further up, but prior to that, it will have to come down. So from that perspective also, it will affect Nifty, and Nifty is likely to fall. So my call for Nifty would be, I would put a stop loss above 93.05, and my target would be 9159 and 9105, somewhere around that level. Around 9100, there would be quite a good bit of support, so that could be there. And regarding the Bank Nifty, I would put a stop loss. I would put a stop loss above 19153. It is a conditional sale. Let it go down below 18900 first, then 18700 to about 18425 would be the base target. But banks are going to go much further down.
Okay. Amit Harchekar, the last time that we spoke, you were bullish. I don't think you would have changed your view. My question is, if you are indeed still bullish, what do you think will take the indices higher?
Well, we see this market going through a sectoral rotation, especially the money moving from financials to other sectors like commodities and IT. We still see the 9100 turning out to be a very strong support for the market on a closing basis, and we still are quite optimistic that this market would move up and test levels of 10,000. If you see the current decline, what we had in this market, we have seen a retracement close to 30% of that entire up move. And generally, when market take a pause, generally that correction ends into that zone of 25 to 30% retracement zone. So we see even after opening, this market becomes a good opportunity to go long. As I said, the very strong support zone or strong support levels for the Nifty is placed at 9100 on a closing basis, and we still see a target close to 9500 to 9700 in a day or two.
In a day or two. Now, mind you, viewers, I mean, as I said in my opening statement, I may be completely wrong, but I would reckon that this would happen on the back of some announcements coming in, because I don't think the world is looking all that great right now, but you never know, strange things could happen. So Amit, therefore, the sectoral rotation, I reckon, is a long-term theory. For the short term, if you are positioning yourself for 9500 to 9700 in a day or two, what are the stocks that you are the most bullish on?
Well, we are most bullish on commodity sector, and Reliance is the heavyweight. Reliance had already seen the move, and we still have a target of around 1700, 1720, which is still intact. Our pick would be going long on Ultratech Cement. We think Ultratech Cement has now completed its ABC correction, and the stock has resumed its up move. We see 3200 acting as a very strong support zone where most of the long positions has lined up, and we see a target of around 3600 to 3700 in next few days. Our second pick would be buying JSW Steel. Again, this stock again forms part of that commodity index, and JSW Steel has also seen good accumulation above 170 zone. We still see an up move target close to 184 to 185, and even opening up long positions at these levels, we would suggest a stop loss of 166.
Okay, so watch out for those names. Rajat, with the view that you have, what are the trading ideas that you're recommending? Even one idea is good.
I would say I would like to sell Cadila today. Cadila is likely to fall. I would put a stop loss about 333, and my target would be 320. Throughout the day, Cadila yesterday traded between 326, 327, around this range. But it could not really take out the early high of 328.50. It was 333 was the high, and it couldn't go beyond 330. So 333 is my stop loss, of 320 is the target, and I would give a buy call. And this time, this stock has corrected quite a bit. This is Havells. I would say that Havells generally you would not like to go long under such circumstances, but a particular pattern in Havells tells me that there is every possibility that Havells would give a counter move. First of all, there is a hammer line pattern at the bottom, and Havells has always given at least some kind of a pullback whenever you see a hammer line after a protracted fall. And this time the fall had been from close to about 565, 70 levels to about 470. So that is So 90 to 100 point fall, and after that, there is definitely going to be a pullback. In that, my Havells call would be, I would put a stop loss below 479.80. Yesterday it closed at 488.45. Target would be 497 and 504. Apart from that, if you ask me, since I'm bearish, so why isn't there any more sell calls? I would say Hindus and Unilever. Sell it below 2033. That's the critical support area for Hindus and Lever. It's a conditional sell call. My targets would be 1971 and 1942, and my stop loss would be above 2056.
Okay, now just keep in mind, viewers, Havells has its results today, so that's the other factor. I mean, and depending on which way the results turn out, the stock could move for a day maybe in either direction. Rajat's call might still work out fine or actually get amplified if the results are in the direction of which his call is pointing towards. But just bear in mind, if you're trading Havells on the back of what Rajat is recommending, just keep in mind that the results are slated to come out later today. Okay, now I want to talk about Asian Paints, fundamentally, technically, maybe on the derivative side as well. First, Goldman Sachs has come out with a note on Asian Paints, and I'm reading out from that note. They've downgraded the stock to a sell from a neutral rating. They've cut the target price to 1,111 from 1,387. They expect volume growth to slow to an average of 6% over the next 3 years. I mean, it's a long call, 3 years, but they believe that this will happen. They believe that the price to the mix growth will be challenged due to price cuts and down trading by customers, which is probably not unfounded fears. And valuations look demanded with the lowest revenue growth expectations. Now, viewers, it's interesting to think of FMCG and staples, largely your staple-like companies, in one vein. But I guess COVID-19 is teaching us that we need to learn to differentiate between companies that will probably not get affected too much and companies that might get affected too much. And Mayuresh, the question out here is a might, right? Asian Paints, splendid company, very less free float out there to sell. I think we spoke about this last week too. But the arguments that we were making about last week, Mayuresh, now Goldman is making them. That why should a business which has the risks of down trading and lower volume growth and lower pricing trade at 47, 50, 55 times? Is that a wrong question to ask? Do you think the market could ask it, and therefore, even if it doesn't correct all the way to 1100, could it show a corrective move?
That's quite a possibility, Neeraj. And again, I think the annualized earnings, at least for this financial year, are probably expected to remain very, very soft. I think what the note is trying to indicate, and what we've also seen in the past for paint companies in general, I think the volume growth is dependent in terms of how the GDP growth is. So I think it's a direct correlation to how GDP will grow. So if the GDP estimates as per the World Bank for India at 1.82%, and if paint companies are expected to grow at 1.5–2 times, you can expect it's going to be a middle single-digit growth for paint companies from a volume perspective. I think the entire leverage that paint companies create around themselves is volume plus price. So I think the volume growth along with the pricing power that they've got creates the operating leverage onto their balance sheet. So I think one of the legs, if it goes off for this financial year, and again, a large part is getting dependent on the second half, both in terms of repainting demand and what happens in terms of competition as well. So there are different aspects to the whole argument, Neeraj, at this point of time. Yes, repainting demand is quite significant. How rural and semi-rural areas, along with urban areas, whether the second half probably brings about a lot of change, because if you're probably having a work from home kind of a situation over the next few quarters, you probably need to keep your house in some sort of hygienic fashion. So I think there might be some return of painting demand coming through. There are two important aspects which I would like to quickly enumerate. One is the cost of paints and the labor cost itself. So now people are realizing that cost of paints is just a very, very small component, but the labor cost itself has become quite significant. So it's better to go off with quality paints rather than the unorganized paints that are available. The shift that you are expected to see over the next few years, the unorganized segment still around 35% for the industry as a whole. I think that gap is going to reduce quite significantly over the next few years. The third element obviously is the dealer perspective as well, and dealers will probably look at ROIs rather than probably look at how much of a profit are they making per kg of paints that they are selling. So I think it's a perspective that you should probably be looking at from this sector's perspective. Short-term pain, absolutely yes. Are there long-term positives? Absolutely yes as well. Are valuations too expensive from a short-term perspective, assuming volume degrowth, top-line degrowth? Yes, absolutely yes. Long-term, do the volumes come back as GDP will come back in FY21 at 6% and volume growth will rebound? Absolutely yes. So I think there are two arguments to be played here. Medium-term pain, absolutely yes. Valuations looking expensive. The longer-term story still looks attractive. So I think it's a call that individual investors take on the time horizon.
Okay. Well, since Amit is bullish, I want to ask him about Asian Paints. Amit, is there a downside risk? What do the charts indicate about Asian Paint?
Well, I see a very strong support around 1500 to 1540 zone. If we see a reversal around those levels, we can still expect a rebound all the way towards 1800. But on the upside, I don't expect the rally to sustain beyond 1800 because on the long-term basis, if the triangle has to get completed, the stock should make another attempt towards 1800 zone.
Now, viewers just want to, so in case you are confused, because you might think that sab kuch bola ja raha hai, just keep in mind that the arguments made by Goldman, the arguments made by Mahesh, all of these hold valid. The bounce that Amit is talking about, I'm just trying to think of the possibilities, could well happen because there is, as we all know, a possibility of a block coming in on Asian Paints from the Reliance side. And typically post-block deals, the stock having corrected so much, might see a bit of an ebbing of selling and then a bit of a bounce that could happen. Now, I don't know whether a bounce will happen, and if a bounce happens, it goes up all the way to 1800 or whatever. Amit and Rajat are more equipped to speak about that. I'm not, but I'm just laying out the possibilities out here. So keep this at the back of your mind. The other thing, and remember, we spoke about the weakness in financials. Now, if the market is to go up or go down, banks will have to play a large part here. And Rajat, I just want to come to you because maybe I missed it. I don't think you had a bank in your idea. My question is, what do the two strong banks the charts indicate? Rajat, we have about a minute and a half for the markets to start. But so a slightly quicker view on a thought on HDFC Bank and Kotak Bank. How do they appear on the charts or the derivative positions or a bit of techno-funda combination that you do?
I would say that HDFC Bank needs to pick out 950, 960 kind of levels. Only then you can expect some kind of an upside coming into HDFC Bank once again. But HDFC Bank over the last 3 days has had black bodies, meaning open is higher and the close is lower, and most of the time the close is near the day's low. There is a possibility that in the immediate future, it might actually slide down to something like 890 to about 870 levels. And that would actually break the intermediate uptrend that it was showing. Personally, if you ask me, I see a retrace of 750 or thereabout, the low that HDFC Bank posted in March. That is a possibility, but not immediately. It could happen. And your other stock that was Kotak Bank, right? Kotak Mahindra is slightly better till such time it breaks 1150. If 1150 were to be taken out on the downside, then it can slide down much further and retrace the March low. And it needs to take out 1320 decisively for it to actually embark on any kind of a recovery. And if you ask me, Kotak, HDFC Bank, IndianOpen Bank, ICICI Bank, all are looking weak. Neeraj, I have been telling on the media for the last 6 months, keep away from banks and financials. There will be a lot of problems and they will pick lower value. So there is no point expecting that these stocks will retain the higher level.
Got it. Okay. Well, and a lot of people would echo that. I think Shankar and Devina the other day when they were speaking to us mentioned that they would just stay away from financials, lock, stock, barrel, not touch them with a barge pole, something to that effect. Anyways, we're about 30 seconds away from markets to kickstart trade. Keep in mind, we'll talk about some of the stocks that viewers you've asked about as well. I think sugar is right up there. There's some conversation about some of the other names as well. We'll talk about all of them post the pre-open session. But let's wait for the pre-open rates to come out. We'll probably have a start which is marginally in the red. Keep in mind the currency is the other monitorable. The market started at 10, but we might well have some reactions on the rupee as well today on the downside because the dollar has gained strength across the board. So therefore, watch out. Okay, the first rates. No, I don't think it'll be a 3% downtick as the Sensex is showing, but the Nifty is showing a more believable 0.5% to 1% kind of a move. So we might start off accordingly at about 9,200 or slightly lower than that. Let's see what we do post that. What are the stocks that are in focus today? Well, first talk about the losers. Reliance Industries. Okay, let's wait and watch. Let's not rule out anything. But Reliance is showing some downticks. HDFC showing some downtick. Asian Paints is showing a 2.5% downtick. The likes of JSW Steel, Ultratech are showing some downticks. Titan Company is showing some downtick. So those are a few names. Titan also has some downgrade today, I presume. So those are a few names that you watch out for. Bajaj Auto has this large downtick. I don't think it'll be that way. The stocks were very active in trade yesterday. Let's see if they give up some of the gains. What is doing well? Hero MotoCorp, more sustainable. ITC Reliance showing some gains. Nestle is showing some gains. There's some strength in Britannia, about 0.5%. HDFC Bank is showing some resilience, but these may all fade down. Let's wait for these dates to stabilize really. I just want to maybe look at a couple of stocks on my watch list in the session today. So one of them, of course, has to be Asian Paints by virtue of the kind of report that has come in, and I think we'll talk about it in moments from now. The other one is Piramal, and it's showing a 10% downtick. I don't know if it'll crack that much on open or not, but Piramal certainly looks like a stock which is likely to be very, very weak at the session today. So do watch out for that one as well. A few names that you should very, very closely monitor. Okay, let's talk about Piramal because that's that big one, right? Milind Joshi, Piramal Enterprises. We've seen the impact that a moratorium-led commentary and result had on ICICI Bank yesterday. 85 to 90% of Piramal's customers opted for a moratorium. What do you think the reaction on the stock would be today? What do you think is in store for the near term? Because the flip side is just that the pharma business has done reasonably okay.
Oh, absolutely. So I think the numbers tell it all, right, Neeraj, and what initial quotes you were saying. So I think the financial business's pain still continues from a balance sheet perspective. Absolute GNPAs have gone up quarter on quarter by almost 25, 26 odd percent. The ratio still stands around 2.4 odd percent compared to 1.8. So the pain in terms of the financial services sector, both from an asset quality perspective, the kind of moratorium that has got opted out for, and the AUM, which has probably remained very, very flattish on a quarter-on-quarter basis. I think it's a 1% decline, but the housing finance or the housing loan AUM has actually dropped 10% quarter-on-quarter to 5,500 odd crores. So I think it's a clear indication that one of the legs is clearly feeling the pain, which might still persist as we're seeing the entire macro environment still remaining soft. Pharma is doing well. Yes, they have to a large extent deleveraged the balance sheet over the last financial year and have also raised capital, which gives some confidence. But I think the numbers overall probably do not instill confidence in terms of a strong earnings recovery. Yeah. So the softness might continue. Amit might probably guide in terms of where he's probably looking at the price, but it's looking very, very soft, at least from a numbers perspective.
Okay. Well, but 10% lower, 838. Any thoughts here, Amit Harchekar? I mean, difficult to call a chart, give a chart call on Piramal after the stock starts off this much, but just wondering, what are your thoughts on how the charts look here?
Well, I'm quite bearish on Piramal Enterprises. I see this entire up move unfolding into a rising wedge, and we see overall target moving below 600. So I would wait for the levels for 820 to get broken on a closing basis to initiate fresh short. Stop loss thereafter would be around 910.
Okay. Well, stop loss of 910. Amit, just wondering, what are the, I mean, typically in technicals, there are 2 downsides or 3 downsides that you can see, right? So what are the downsides that you see at a second level, or is this the only call that you want to give?
No, I see the immediate target we are looking at around 600, and if that gets broken, you can expect a downside of more than 30% below that. But as I said, because it's a channel breakdown, you need to open shorts only once you see a closing below 820.
Okay. Now, some stocks on which there have been up moves in the last few days, and I wonder if Hero MotoCorp can continue rising. What did you make of the two-wheeler strength, Mayuresh Joshi, in the last 2 days, especially yesterday when some of these opened up, and therefore at these 13, 14 times multiples, is Hero an investment idea?
So it's very supportive in terms of valuations, Neeraj. The stores which have opened up at the dealer end, what you've obviously seen in terms of some numbers which have come through in terms of sales. So post April, I think there has been some element of rebound after the stores and the dealerships have opened up. But how sustainable are they going to be, I think, is the question that everybody should ask. So I think the general assumption, again, like for most sectors here, is that the volumes probably will remain flattish either for this financial year or actually might degrow. Now, it's similar to other sector as well, because you need that entire leverage to get played through. Yes, they've increased prices because of the BS6 variants that they've got out in the market, and which is a very obvious need because of a lot of modifications that they have done, both from a technology perspective and otherwise. So how much volume and demand actually sustains going forward is critical. Yes, social distancing and what probably happens in terms of owning a motorcycle, for example, which is still a cheaper option compared to a four-wheeler at this point of time, specifically from a semi-urban and a rural perspective, because Hero is probably more skewed towards the rural area at this point of time, and also the variants that it has got in terms of offerings from the 125cc to the 150cc, and heavy competition at the entry level from Bajaj Auto as well. So I think a lot of variables here, but I think it's reacting quite sentimentally in terms of the initial news flow that is happening. Larger picture, I think I'll still wait it out, because I'm not really sure in terms of how volumes are going to sustain going forward.
Now, the stocks which have fallen a bit, and I wonder, because the pre-open rates are already showing, viewers, I just want to keep you abreast of the key positions that the market is probably hovering around today. There is Piramal that we spoke about already. There is Z Entertainment, and there is Asian Paints. Now, Rajat, I want to come to you on this one. I know we've discussed Asian Paints ad nauseum today for a lot of times, but it deserves that kind of a conversation today. The only point is, Rajat, for the last 7 days, Asian Paints has fallen about 13% at 1539, 1540. Is the juice out of the short trade, or do you reckon that one can still initiate a short trade?
Well, so long as the 5-day exponential moving average is not crossed, that means it is actually trending down. It's a very sharp trend down, and probably with this downgrade, you might find a bottom today. That is a possibility. But before that, what I would like to see is that if Asian Paints sustains below 1545, in that case, the next target would be 1517, and thereafter even 1500 would be broken. One thing I would like to say here is that Asian Paints is one consumer stock, let's say Riverside Lever and other Nestle's of the world. Asian Paints, right from September onward, has been distributed between 1800 and 1950, and that distribution has been completed. It was actually a pullback swing, a corrective swing that has happened from March end to the recent past. Again, 1850 was retested. Now it is falling. Now I see Asian Paints going down below 1350 going forward. Immediately you can see a bottom, and thereafter a pullback. That can always happen, but then its direction will be down, despite all its fundamentals.
Yeah, despite all its fundamentals, but I reckon that the fundamentals are under question right now. That's the problem. 8 minutes done in the pre-open session, and we have the markets likely to start off about 0.75% lower. The point about businesses like or companies like Asian or some of the others are the valuations that they've traditionally traded at, and whether those valuations can be called under question, because the spending pattern might change. It might not change for Nestle, but it might change for some of the others. It might not change for Britannia, but it might change for some of the others. And HUL's numbers showed that, right? The foods business was okay, but the discretionary part was under pressure despite the distribution. And the same could happen to businesses like Asian Paints. The same could happen to businesses like some of the consumer durables. And I think you have to question that before you take a call based on what these businesses have done for the last so many years. So just be mindful of, just question every change that can happen. By the way, Bajaj Finance is sub 2000, 1989. So that is that one big mover. HDFC Bank is knocking on the doors of 900. So a downtick might be possible here as well. So a couple of these names are looking like being under pressure. But the pre-open rates have settled down. We are about 5 minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. First up, Piramal Enterprises revenue declines 2% and the company posted a net loss of 1702 crores versus a profit of 455 crores on account of MAT credit of 758 crores written off. The stock starts off lower. Godrej Agrovet revenues grows 17%, but profit declines 34% because of an exceptional gain in the base quarter. But the margins, operating margins expand due to lower input costs. Government of India mulls resuming commercial flights on May 18th or earlier, according to Bloomberg News. Warburg Pincus has decreased its stake in Laurus Labs from 19.63% to 11.68% in the bulk deals that occurred 2 days ago. Goldman Sachs downgrades Asian Paints to a sell, cuts the target to 1,111, implying a 30% downside on weakened economy, leading to low volumes. InSwift Laboratories received EIR from US FDA with zero Form 483 observations for the surveillance GMP inspection of its API manufacturing facility in Derabasi, Punjab. I'm watching out for earnings from Nestle, Bandhan Bank, Blue Star, Havells, and IndiaMart Intermesh today. Whereas actually IRCTC or IndiaMart Intermesh, I mean, two kind of internet-led businesses, but the bookings opening, will that drive IRCTC higher? And what about IndiaMart Intermesh? Any thoughts here?
Yeah, so I think it's sentimentally positive, but how much does that sustain? I think that is again the question mark to be answered. For IndiaMart Intermesh, again, I think the model probably looks very, very sound in conditions like this, more digitally driven. Look at the supplier base that they've got, 1998 odd million, if I'm not mistaken. And again, the kind of revenues that they've probably posted for 9 months. So I think the show might continue from this quarter's perspective. One might very well argue in terms of how the valuations are stacked up. But hey, I think if these business models are expected to evolve and these guys expected to remain at the pinnacle of the evolvement because of the head start that they probably got, maybe those valuations sustain. So I think the sane argument here would be to wait out for numbers. Look, let the numbers come in, let us analyze those and then take a call on the stocks.
Oh, okay. The other one, awaiting numbers from Nestle. Just wondering, Vairish, quick thoughts, and then I'll take a technical perspective too. But largely a foods business, Nestle, Britannia, etc. Do you expect that the numbers could actually defy what an HUL showed in its numbers?
No, there might be some softness like HUL exhibited, right? And therefore that softness can actually get played out in terms of volume-led price. However, I think the positives that Nestle has compared to the others is that it's more urban-driven. So I think a majority of its top line, almost 75-80%, is urban-driven, which will not see a decrease significantly in terms of discretionary spending. Even during lockdown, and the Maggie and the variants that we've probably seen are still available, though I think it's at lower level because of the lower utilization level at its plants. But again, I think the kind of mix that they've got, the kind of products and the innovative products that they've introduced, and the success of those products, the penetration that they're trying to do in terms of the rural business to direct reach, I think these are positives that I see. Valuations might be on the higher side, but again, I think this is one quality stock that if anybody's holding, should hold on. This is one stock that has got added, Neeraj, as a clear disclaimer to our global focus list. Anybody who wants to probably look at this stock, wait out for the numbers. If the stock pull back 6-7% from the current level, if it does, I think that would become a good entry point, assuming the numbers and the balance sheet commentary.
Okay, just a quick chart check. Actually, let's just get into top calls from our experts first before we talk about any more stocks. So, Amit, let me come to you first. Your top call for the day today.
Well, I would be suggesting a buy on TCS. There's a double bottom breakout and we see the target of 2100. The stop loss for long positions would be 1870 on a closing basis.
Okay, so long on TCS is Amit's top call. Rajat, your top call for the day today.
Well, in this one, we were below 2033, targets 1971 and 1942.
So, sorry, you initiating a short on HUL, right, Rajat?
No, right. 2033, below 2033, it's a conditional short, and targets should be 1971 and 1942.
Okay, so conditional short on HUL below 2033. That's the call that Rajat is making. And by the way, viewers, keep in mind, HUL is starting off lower. So you have to bear that in mind. 2020 is where the spot is indicating. So assuming that that's how it starts, maybe the short call could be initiated on open. We'll ask Rajat immediately post open if this happens or not. But Mayuresh, take a moment to thank you for joining you today. Amit and Rajat, just stay on. We'll take in quick opening thoughts from you. Maybe a recap of your ideas and whether they can initiate, whether viewers can initiate it or not before we thank you. But here's how the first rates are going to happen on the indices. About 0.7, 0.8% lower for the Sensex and the Nifty. In fact, 1% lower straight away. Asian Paints 2% lower, so watch out for that one. Starts off weak, about 2.3%, 1533 and counting. JSW Steel, HDFC, IndusInd Bank are amongst the others which are correcting. The markets are in a bad mood. The Nifty Bank is 1.7% lower and it is looking very, very weak. HDFC Bank 895, HDFC 2% lower. IndusInd Bank, ICICI Bank, SBI, all financials are getting a pummeling of different magnitude altogether. To bear that in mind, there is a lot of pressure. Axis Bank is down 15% for the last few days and is down another 1.5% in the session today. What is maybe withholding some bit of selling pressure? Indian Oil, Nestle, Britannia, Dr. Reddy's, Cipla, Gale. Those are a few names, but do watch out for Asian. It's just 1530 right now. What if there is more in store? What about some of the broader end of the spectrum names? I think I will watch out for Piramal Enterprises, naturally so, because that would be that big one which might be reacting on its numbers. I'll just tell you in a bit. Piramal 5.7% lower at 877. RBL Bank 4.2% lower at 112. Shriram Transport corrects a bit. Indiabulls Housing, Manappuram Finance. Financials are taking it on the chin. Federal Bank, Adani Enterprises, HDFC, those are a few other names which have corrected quite a bit, but watch out for Piramal. That is the big one that is really cracking in the session, now down about 6.5 or 7% lower. What is doing well? Strides Pharma gains another 1.5%. The last 1 month has gained about 10%. Oracle Financial large dividend announcement up about 1.7%. Amara Raja 1.3%. Biocon 1%. Max Financial about 1%. Interglobe Aviation at 970 and Godrej Consumer is up about 1%. So those are a few other non-nifty names which are doing okay. Anything in the small caps? Let me just try and see if some small cap names might be active. No, not too much on the gaining side, I must say. On the losing side, again, the ADAG group stocks continue to languish, but I don't know if they can be sold from the levels that they are at. DCB Bank is correcting about a couple of percentage points, so that is also looking slightly weak. And yes, on the BSC small cap space, Motilal Oswal down about 5% after numbers and the loss that it posted. There is weakness there, and amongst the gaining side, well, Hathway's at 25. That stock is really going well. Soba is about 5% higher. Den Networks is about 5% higher. So the Reliance Group stocks continue to rise and shine for themselves. All media subsidiaries from the Reliance Group, Reliance Industries Group, continue to do well. Vedanta is up about 1.7%. Do watch out for that one as well. But Nestle, I think, has given up. No, Nestle is still up about 1%. The big loser, of course, is HDFC Bank, 890 for itself. Wow, that one has really lost some points in the last few days. Quick opening thoughts from our experts. Amit Harchekar, to you first. Your TCS trade, long trade, is it still executable, Amit?
Yeah, absolutely. We see, as I said, a double bottom breakout is already active. So we are looking for a target close to 2100. Stop loss for the short-term trader, as I said, 1870 should be kept on a closing basis. Overall view on the market, as I said, 9100 remains a very strong support zone for the market. We expect that to act as a reversal zone, and we are quite optimistic that Nifty should head towards 95, 9600.
Okay, Rajat, what about your opening thoughts?
I would say I stick to lever short, and I'm expecting that 1970 to about 1950 during the day session. If you remember, Neeraj, yesterday in the last session price from 245 to about 330. Somebody was selling for delivery in lever. That is the reason why I chose lever. Still, I respected 2033. That's why that was a conditional call. But lever is going to go down. And if you allow me, I will make a small observation. 1990 to about 2000 was the era for consumption stock led by lever. If you remember, at that time, lever was posting 36% CAGR in its earnings, and lever used to command the big thing, big P. And same thing happened from 2009 to about 2019. The era for consumption stocks are over. Probably, we are bringing back IT telecom in a different name. This time, some new narrative is going to come with digital. Maybe Reliance is joining with the Jio part. So there will be pressure not just on banks and financials, but also on consumption stocks. There will be ample fundamental reasons coming in for the next few months to actually dump consumption.
Okay. By the way, Asian Paints is down 3% and that was known, but I think the weakness in the likes of ICICI Bank is quite astounding. Down about 5% in yesterday's session and another 2.5 to 3% in the session today. In 7 days has lost about 15 or 16%. Amit Harchekar, would you reckon that there could be a bounce here because financials are looking terribly weak right now?
Well, we are not buying financials even after this decline. There could be a phase of underperformance or a sideways movement in most of these financial stocks. And as I said, we think commodities would be a safe space which will outperform the market, and that will take the markets higher. For Bank Nifty, only thing is if it manages to sustain about 19,100, I think only then the Bank Nifty has the potential to rebound by around 6 to 7%. But that's it. We don't expect overall rebound beyond 22,000 even for the recovery what we are expecting.
Yeah, well, what is likely doing well? Maybe some commodity names like Vedanta too are doing okay, about 2.5% higher at 81. So do watch out for that stock. And Bharti Airtel is sustaining. Actually, Rajat, come in on Bharti Airtel. I mean, while Reliance has shown the kind of bounce that it has, and for adequate reason, Bharti's not quite shown the same kind of bounce in the last 7 days or the last 1 month compared to Reliance. Could there be some upsides here in Bharti Airtel?
See, Bharti can show some upside, but the problem with Bharti is that unless it crosses 565 to 570 and sustains above that, Bharti's current rally is capped. Bharti, in fact, Niraj, I told you that if it is Reliance X-right, then even Reliance will fall, so will Bharti, because Reliance will come down to something like 1450, 1400, thereabouts. And after that, that rally to 1700 will happen. But for now, everybody I speak to is long in Reliance. Then who is selling? That's my point. So Reliance and Bharti both are now deputed stocks. And they will come down a bit. And after that, when people, weak longs will actually liquidate their position, then you will see these two stocks will move up again.
Okay, so, well, I think that's a point well taken. By the way, Asian is now down about 3%. Viewers, keep in mind the gradual slowdown in Asian Paints is looking pretty ominous right now, despite the fact that the last 7 days the stock has corrected about 14%. I mean, at times stocks can correct even longer. So be mindful of that. The banks are looking weak. The world markets are not looking all that great, and the Sensex and the Nifty are clearly under pressure. So no surprises here. We are looking at some stress right now on the equity markets. 9128, not out of it by a long shot. Let's wait and watch if this corrects. Just one last question, Amit Harchekar. You look at commodities so closely. Any thoughts on two disparate performers? One of them is Vedanta, which is doing well, and one of them is ONGC, which is kind of not quite able to sustain any kind of gains.
Vedanta, we see this rally getting extended towards 95, 97 zone. 98 remains a long-term resistance zone, so we have to watch out for that. And ONGC, we have a positive view because we see 68 to 69 turns out to be a strong base for this correction. And on upside, we are looking for a target of around 88 to 90 zone.
Okay, Jaman, we leave it at that. Both of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. In a moment from now, we'll get in Milind Karmarkar and of the Dalal & Broacha Portfolio Management Services. And I think it'll be important to understand from him because he looks at consumers so closely as to what are his thoughts on what could happen with an Asian Paints, what could happen with some of the other businesses in the consumption discretionary, and maybe some of the non-discretionary consumption names, the likes of Staples as well. So I'm really looking forward to that conversation with Milind Karmarkar. I think consumption space is probably the biggest talking point, and maybe all consumers would be the interesting ones to monitor in the session today. Nestle is a separate case in point because of the results, but aside of that, maybe the valuations of some of these consumer names could be called under question. So you have to be mindful of that. Milind Karmarkar is with us. Milind, so good having you. Thanks so much for taking the time out.
Hi.
You are the apt guest for the day today, Milind. There is this large question mark that Goldman Sachs has raised on discretionary consumption today. I wonder what are your thoughts, because you look at this space so closely. Then we'll come to the overall market view too. But what are your thoughts on consumption?
So it's like this, that all said and done, we have already estimated that for the first 90 days or first quarter, most of the sales will be zero. The second quarter is also not going to be so great, but consumption will return back in the third quarter. Discretionary consumption, I think third and fourth quarter should be reasonably all right. In fact, I do expect a growth in the fourth quarter. So I know that these are completely different times, and no one has seen them, so neither me nor anyone else. So it's a guesstimate which one makes. So whether social distancing will work, whether people will go back to malls, whether people will go back for discretionary spending. So my view is that human psychology never changes. So once we have some kind of a treatment or some kind of a vaccine, I think we will revert back to the mean. So in the shorter term, yes, there is a concern, but in the longer term, I still don't see any issue.
What valuation contractions, Milind, do you then give to some of these businesses? Because the return to consumption would be subject to, one, the vaccine coming in, two, the economic prowess, isn't it? I mean, the difference between normal disruptions versus this disruption is that there have been job losses, there have been salary cuts, and therefore the purchasing power would come off. I mean, even if people don't completely shun buying, there'll be massive downtrading that people might have to do, even if they don't want to do.
So absolutely, I don't deny that at all. So when I'm saying that consumption will continue to do well, what I'm saying is that over a longer period of time, and when I say longer period of time, it's anywhere between 3 to 10 years. And I don't think that changes, because it's all about a belief that India will do well. So if you believe that India will go back to 6-7% real growth, 3-4% inflation, so 11% nominal GDP growth, then all these things are possible, unless and until you believe that that will never happen. So I don't think that the pandemic is so big that we are down to 2% a year. That is not going to happen. As far as vaccine is concerned, I think, again, till a vaccine comes in, no one knows how long will it take. But the way there is collaboration on research, there are already 100 big companies working on a candidate. 3 more or less have moved to clinical trials. So looking at all this, yes, shorter term there are issues, but longer term I don't think there will be issues. Things will go back to normal. I'm pretty confident of that. But shorter term, yes. So shorter term, you will see some kind of a valuation contraction. But once these stocks go back to say 20-25% year-on-year growth, you will see the valuations coming back.
Okay, but just one more question, a follow-up on that, Milind, and that is, what kind of valuations do you think the market at large could give to some of these names? Like, for example, on a trailing basis, unless my math is completely off, Asian was trading between 50-55 times. Now, my question is, because the future is uncertain,
do you get the name?
I'm just giving an example of Asian Paints.
Yeah.
I think on a trailing basis was 50-55 times.
Yeah.
Do you reckon that valuation multiples should, because of the uncertainty, contract to a particular level? And then
so
if they bounce back, great. That's my question, really.
So let me put it this way, that in the shorter term, we could see some more contraction. But as of now, where the prices are, I think most of the investors believe that they will go back to growth. Though especially in cases like retail and other places, we have seen a contraction of about roughly about 25-30%. And it is also possible that till that time the growth doesn't come back, you will not see any kind of revaluation in these stocks. But within consumption also, there is a huge, there are a lot of sectors involved. So frankly, I consider even finance as consumption. I consider insurance as consumption. I consider FMCG as consumption, retail as consumption. So in a certain specific sectors or companies, there could be a downtrading which can happen. But in general, this sector is the sector which will have the significant benefit of rising per capita income and economic growth. So unless and until you are bearish on these two, that there won't be any economic growth in India over a longer period of time, and there won't be any increase in per capita income, but then you should not be investing in equities at all. So if you believe that these two things are true, and these will happen maybe after 9 months, 10 months, whatever call one takes, and then I think consumption is the place to be in. That's what I believe.
Okay. Milind, the other question that some people would be raising would be the relative valuations of India versus the other markets, right? TTM basis, again, MSCI India, as of the April 30th numbers that I have, about 19 times. What business, is my question, that a skeptic would ask, what business does India have to trade at 19 times when the only factor that was always working for India, which is growth, is going to be absent for sure in FY21? And there is uncertainty about how strong they will bounce back in FY20.
As I say, I always like to draw my conclusions from history. So if one goes back, again, I may be off by a year or two, but in 2001-2, your GDP growth dropped to about 3.8%. And after that, consistently for 5 years, it was about 7.5%. So whether this can happen now, I don't know. But at least in history, there is an example that this has happened. So I don't think it's, as I always say, that it's always the same. One should try and look at history, try and learn from history. One may say that this is a one-off event, which is possible. So that is the reason why we are saying that maybe 1 year nothing will happen. And equities are like that. You invest in equities because there is risk in it. So I think one will have to stay invested. That's what I believe.
Okay. A pocket, Milind, where, well, since you use the terms up trading and or rather that you use the terms that you consider all of these as consumption, I wonder if you believe, is the hypothesis that in insurance there might be up trading, I think.
So insurance, I think India is extremely underpenetrated. If one goes back to China and sees what happened to insurance companies in China after the SARS epidemic, if I'm not mistaken, they showed a consistent growth of about 30-40% for next 2-3 years. So it basically, these times probably help you in understanding the importance of insurance. And that is the reason as things start normalizing, people go and start insuring themselves or insuring their properties and things like that.
So would you be in favor of life insurance or general insurance, Milind? Because
both.
The dynamics are
we are
different,
underpenetrated
right?
in both. So I think pick up the best stocks in it and stay invested. That's what I believe.
But the valuations might be a bit of a roadblock, or no, not quite?
So as I said, that valuations in a sector where huge growth potential is possible will always be high. There may be opportunities. I mean, I should not say opportunity because it's unfortunate, this pandemic. But sometimes these type of natural calamities or any other issues give you time to invest in such companies at a reasonable price. And when I say reasonable price, I am saying reasonable price after considering growth over a longer period.
Okay. Milind, now I've asked you about a lot of spaces already. Anything in the last 15, 20 days that you've read, you've come across, you've analyzed that you found very interesting? Any sector, any business, any market? So
as far as the sectors are concerned, I think, so we tried and analyzed each of the sectors. So what we find is that, for example, FMCG, then you consider insurance. These type of sectors, the fall is quick, but the recovery also will be reasonably faster than other sectors. So I think these sectors are something which you can look at. When it comes to retail or when it comes to finance, the downfall has been sharp. The recovery will be a kind of steady or a slow recovery over the next 9 to 12 months. So if one wants to invest, I think probably one should look at investing in FMCG and insurance. That's what I believe.
Okay. Wondering you're staying off financials, Milind?
So financials, as I said, what we are saying is that, so if one is invested, one continues to remain invested. If one, because financials, I think the recovery will be slightly slower for simple reason because of the moratorium which they will be giving to to many of their borrowers. And because of that, their asset quality will be stretched for some more time. And that is the reason why probably the bounce back there could be slower. That's all. Otherwise, those are also one of the best places. So as I said, these type of events give you an opportunity to invest for long term. And the only issue is that how does one invest? So my view is that over the next 6 months, one divides one's money into, say, 10 pockets and invest say 10% each over the next 6 months. So one gets a reasonable, one is probably very cautious while investing, and at the same time, one gets the benefit in case the market goes up or comes down.
Got it. Okay, Milind, we'll leave it at that. Thank you so much for taking the time out and speaking to us today.
Most welcome, Neeraj. Most welcome, and stay safe, and see you sometime.
Yes, you too. Thank you so much.
Okay, thanks. Bye.
A pertinent wish, actually. Yeah, stay safe. That's probably the most important thing right now. Okay, just looking at the markets, Maruti is the top loser. The HDFC Twins follow suit. Then HDFC Bank is 886 now. Serious weakness. 10% lost in the last 2 days. I think all financials are cracking simply because we are not hearing anything about. And I think the positions were built towards some bit of announcement coming in, and now those positions might be unraveling. There is weakness in ICICI Bank, Tata Steel, ONGC, Kotak Bank, Eicher Motors, HUL, Bharti Infratel. All of them are looking weak. Reliance is in the red, by the way. So something that we spoke about today is happening. About 1% lower is Reliance Industries, I reckon. So that is also looking slightly wobbly. What is doing well? Handful of them. Vedanta, UPL, is strength in Titan, or 0.5% higher. Strength in Nestle, about 0.5% higher, or slightly less than that. And HCL Tech, marginally higher. Bharti Airtel, marginally higher, but that's a few and far in between. Otherwise, the gains are fairly muted across the bourses. Piramal, of course, is languishing under pressure. Here's, we wrap it up on this leg of Indian Open then. And thank you so much for watching. Have a safe, profitable day ahead.